For people who are considering going from traditional finance to the crypto space, or just curious about Bitcoin, Blackrock has released a report that could change the perception of Bitcoin in traditional finance, as it explores how its appeal lies in its detachment from traditional risk and return drivers. Page 3 outlines the key points and states very clearly the seismic shift in the understanding of Bitcoin, that it's no longer just a high-risk speculative asset. They state that obviously it's still a risky and volatile asset, but its return drivers are fundamentally different from traditional risky assets. I guess they're referring to tech stocks in the Nasdaq and other cryptocurrencies like Ethereum. Bitcoin is unfitting for traditional frameworks, including the risk-on versus risk-off framework. Bitcoin's nature as a scarce, non-sovereign, decentralized global asset has caused some investors to consider it as a flight to safety option in times of fear. The report also states the role of Bitcoin regarding concerns over global monetary stability, thus making it inverse to traditional risky assets. In their introduction, their answer to "Is Bitcoin a risk-on or risk-off asset?" is that it is unsuitable for this and most other traditional finance frameworks, and that the return drivers are fundamentally uncorrelated with other sources of portfolio returns. They also dramatically state its long-term historical returns have been vastly higher than all other major asset classes. My personal take on this is that it may not be a flight to safety in the short term, but over the long term there's no other better asset in TradFi. It seems obvious that in the world of money printing or quantitative easing, Bitcoin is the best and most obvious bet. However, on page 7 they still clarify that Bitcoin is still a risky asset, as it's still just emerging technology on its adoption journey to becoming a global payment asset and store of value. The risks include regulatory challenges, uncertainty over the path of adoption, and a still immature ecosystem. But the report points out that these risks are unique to Bitcoin and not specifically shared by other traditional investment assets. It suggests that Bitcoin held in modest allocations can have a diversifying effect on portfolios, whereas at larger position sizes, its elevated standalone volatility starts to have an outsized impact in increasing portfolio risk. The report looks at the technological breakthroughs achieved through Bitcoin, its volatile journey to a $1 trillion market cap, and its low correlation with US equities, among other things. If you're new to Bitcoin and crypto, or interested in how TradFi might view Bitcoin for institutional adoption, it's well worth the read.